Greetings, beautiful people. Welcome to Coming Out Black's 31 Days to Business Startup for LGBT Entrepreneurs. Day 18, Accounting Overview. Now, before I really kind of get into some basics of accounting, because really to talk about accounting would take a while. But for this session, we're just going to do a little bit of an overview. But before we do, I'm just going to kind of talk a little bit about financial literacy. And the reason why I wanted to talk a little bit about financial literacy is just so that you can kind of get a sense of where you are on the spectrum in terms of your understanding about financials. And so a couple things I just want you guys to keep in mind when you're thinking about accounting is like, know your tolerance for financial risk, meaning that, if you can't stand for your business to fail, then you're what we call high risk. You really want to have some stability in starting your business if you can't really afford for it to sink or for it to fail. And then also, when you're thinking about liability and risk, your company legal structure will either support that or it will perhaps cause you to have even additional problems if you don't have the right legal structure. So make sure when you're thinking about your business and liability and risk, make sure that you have the right structure to support that. Another thing I want people to think about is how much money does it really take to start your business? I do online stuff. So for the most part, it doesn't take a lot of money because all I need is equipment, right? A computer, sound equipment, microphone. I do need a website. I need other apps and stuff like that. But for the most part, it doesn't take a whole lot of money. And then also think about what startup expenses are crucial versus things that are questionable. So yeah, I would love my own nice office in a really chic building. But is that really crucial to the startup of my business? No. Do I even need my own office space outside of my home? Not really. That really would be what I call overhead, and I would be spending more money than I maybe would really want to be spending. But think about, what are the things that you absolutely have to have for your business, and then think about the things that, maybe you can get in the long term. And then the second thing is thinking about credit, because when it comes to business, credit and debit becomes something just a little bit different. And you need to understand the relationship between your personal credit history and your business lending. Because in the beginning, banks are going to use your personal credit as a measurement for whether or not they want to make a loan to you. And so it's not necessarily, well, let me just say this. The better your credit is, the more likely you are to get a business loan. And this is actually a longer discussion than I have today. But just think about that. And also, when you're thinking about getting credit, whether it's a loan or a credit card, just be careful about that stuff, because it's just like in your personal life. And it is, although they call it credit, it really is debt. And you just don't want debt. See, debt for a business is really a liability, and you want to make sure that you don't carry too much liability as it pertains to your business. And then the other thing I want you to think about is, think about accounting. This accounting overview is really about helping you understand that you need to be in the throes of your accounting matters. You need to know what's going on with your money, what's coming in and what's going out. You need to know specifically. You need to know at what rate. You need to know when you have enough money and when you don't have enough money, when maybe you're wasting money or when you're losing out on revenue that you could have gotten. I really, 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 as a bean counter, always encourage entrepreneurs and business owners to get serious about this money business and become financially literate so that you can be an integral part of the accounting process. So you've got to learn how to record and track business income and expenses. That's just kind of the basics. You've got to learn, sooner or later how to read and interpret business financial statements, because they tell you what's going on with your business, and a lot of times can tell you what might be going on for your business in the future, but more importantly, what has gone on with your business in the past. And sometimes that can be indicative of what possibly could be coming down the pike. I can look at people's financials and I can tell a whole lot about their business just by looking at one financial statement. I can just really scan it and I can tell you everything you ever wanted to know about your business. You want to be able to be in that position to do that, because then you can make sound financial decisions as it relates to your business. And then also you want to be able to control the cash flow to keep your business alive. And so there are 3 statements that you're going to want to look at probably on a regular basis. But also, you're going to want to think about how you want to manage your accounting. I recommend QuickBooks. It is a commercial software product. It pretty much, QuickBooks has gotten to the point where it can handle almost any type of business that you have, from the simple business to nonprofit business to big corporations. They have so many modules and so many add-ons and so many different elements they can add to their accounting software that it's pretty flexible, and it pretty much will give you everything that you need. So when we're thinking about accounting, there's 2 different ways you can do your accounting. You can do either a cash basis method, and that's where really you're just talking about when the cash comes in and when the cash comes out. It'll tell you basically at any point in time how much cash you have. And let me just tell you this much: you either have cash or you don't. However, the accrual system is just slightly different in that it is going to record cash in and cash out, but a little bit differently. So for example, let's say you have a client that wants to buy 20 t-shirts from you in 2 weeks. Or they already put it in an order and you've already created an invoice for them. In the accrual system, it's going to kind of take in consideration that you've already sold those t-shirts and that for the most part you're going to get that money. It makes that assumption. And so, but the actual cash for those t-shirts is what we call receivables, and then that will be recorded as a separate transaction. And so it's the best way I can explain it is this: cash basis accounting tells you exactly how much cash you have. Really, accrual is speaking to the potential of the cash in and the cash out. But that cash in and cash out may not necessarily have happened at that particular moment. And depending on the nature of your business will depend on whether or not you'll use a cash basis system or an accrual system. The accrual system for me usually is for businesses that have lots of overhead, where there's cost of goods, where there's other types of transactions that can be considered kind of assets, and then also there are other transactions that will be considered liability, depreciation, all those other things that come into play when you're thinking about your financial situation. And so what I was saying before, I was talking about the financial statements, and I'm just going to talk about 3 different kinds. There are a whole bunch of different kind of financial statements, and depending on what it is you want to know about your business, you can generate different kinds, and they will tell you different information, and they will give you different kind of snapshots of what's going on with your business at any particular time. But let's just talk about the balance sheet. The balance sheet really is the sheet that's going to tell you what's going on with your business at that particular moment. What is the balance, right? It's kind of like your checking account. When you go to the bank, what is your balance? That's your balance sheet. That tells you how much money you got and if you have any money. And then the other thing is the income statement. Now that statement really is going to tell you, and a lot of people talk about this P&L, and it's a profit and loss statement. It really tells you, are you making a profit based on the information at that particular time in terms of the amount of revenue you've generated, subtracted from all the expenses of your business? Are you making a profit or are you not making a profit? And so it's one of the more important statements. It also is the statement that can provide you with some pretty solid information about what's going on with your business and what kind of steps or strategies you might want to be using at that moment or in the future. And then the last sheet is the cash flow. And the cash flow is pretty important, particularly for those businesses that cash is a big issue, because your cash flow statement will give you an indication of And usually cash flow statements come out of the accrual system, because a lot of times you want to kind of consider, well, how much cash am I going to have next month based on receivables? Or how much cash am I going to have next month based on payables, which are the things that you owe other people? And will you have enough money to do payroll? Will you have enough money to perhaps purchase supplies or pay the rent? So your cash flow, the analogy that I always use about cash flow is, it's like gas in a car. If you ain't got no gas in your car, guess where you going? Nowhere. If you ain't got no cash in your business, guess where your business is going? Nowhere. So, and if you're on an empty tank, then you got a little problem. But if you got a little something in your tank, if you got a little something, if you got a little cash, then you know that you can do X, Y, and Z. But you always want to make sure that your cash flow is in sync with the needs of the business. And you don't want to be in a situation where you just don't have the cash to pay for the things that you need to pay for. And also you want to make sure that you receive all the money that is owed to you as well. So when you're thinking about accounting, I really just encourage you to become financially literate, and I encourage you to learn as much as you can about these financial statements and to understand these numbers as best as you possibly can so that you can make sound financial decisions. I hope this has been helpful. Thank you so much for joining me. You can visit my website at www.comingoutblack.com, and in September we have the Business Academy, where we will be doing online professional development training courses for LGBT entrepreneurs. So once again, thank you. I loved having you here with me. I hope to see you again. Take care. Peace and love.